The intrinsic value of bonds and stocks is a fundamental concept in the investment world. It represents the true value of an asset based on its underlying fundamentals such as cash flow, earnings, tangible assets, and future prospects. In this text, we will explore the intrinsic value of bonds and stocks and how it is calculated. We will explain in detail how to do this. Intrinsic value of securities. Bonds, like debt securities, have an intrinsic value based on future streams of interest payments and principal repayments. A bond's intrinsic value is calculated using bond valuation techniques such as net present value, NPV, and the rate of return demanded by investors. The NPV is a technique that discounts the expected future cash flows of the security to the present value, taking into account the rate of return desired by investors. The greater the expected future cash flow and the lower the required rate of return, the greater the intrinsic value of the security. For example, a bond with regular cash flows and a low risk of default will have a higher intrinsic value than a bond with uncertain cash flows and a high risk of default. Another important factor in determining the intrinsic value of a bond is the market interest rate. If the market interest rate increases, the intrinsic value of existing bonds will decrease, as investors will demand higher rates of return for investing in bonds. On the other hand, if the market interest rate declines, the intrinsic value of existing bonds will increase, as investors will be willing to accept lower rates of return. Intrinsic value of shares. The intrinsic value of stocks is determined by a number of fundamental factors such as earnings, cash flows, growth, tangible assets, and the company's future prospects. There are several stock valuation techniques that can be used to calculate intrinsic value, including multiples analysis, discounted cash flow, DCF, and the dividend valuation model. Multiples analysis involves comparing the company to other similar companies in the industry based on metrics such as price-earnings, PE, price-book value, PPV, or price-cash flow, PCB. If the company is trading at a lower multiple compared to its peers, this could indicate that it is undervalued and has a higher intrinsic value. FCD is a technique that discounts the firm's expected future cash flows to present value. So far, so good. But what about the intrinsic value of a smart contract? Lies in its ability to generate recurring cash flows over time so as not to become a purely speculative symbol. This token has this characteristic: ballast of tangible assets and professional management. Read our white paper on the official website.